This is your Swap Hunt Daily News for March 9th, 2026. Strategy just made its largest Bitcoin purchase in months as on-chain data flashes some of the most bearish signals we've seen this cycle. Markets are attempting a recovery today, but sentiment remains deep in extreme fear. The index is sitting at 8, one of the lowest readings of the cycle. The total crypto market cap is bouncing modestly after last week's sharp drawdown, but the broader regime remains bearish. Bitcoin is ranging in the upper 60,000s, with the EMA slope still trending negative. Altcoins are staging small relief moves, but nothing that signals a trend reversal. It's a fragile environment with macro uncertainty from geopolitical tensions adding pressure across risk assets. Strategy has made another massive Bitcoin acquisition, adding nearly 18,000 Bitcoins for $1.28 billion. The company's total holdings now stand at 738,731 BTC. The purchase was made while Bitcoin was trading below Strategy's own average cost basis, meaning the firm is actively adding to a position that is currently underwater on paper. That detail is significant. This isn't a buy at a comfortable margin of profit. This is a deliberate accumulation move during a drawdown, which is consistent with everything Michael Saylor has said publicly about treating price weakness as an opportunity rather than a warning sign. Strategy has now spent approximately $56 billion acquiring its Bitcoin stack. At current market prices, those holdings are valued at around $50 billion, representing a gap that will raise eyebrows among shareholders and traditional analysts. What makes this purchase stand out is the scale. A $1.3 billion deployment in a single week during a period of broad market fear and institutional outflows is a statement. Whether that statement is one of conviction or overexposure depends heavily on where Bitcoin goes from here. Bitcoin ETFs have just snapped a brutal 5-week outflow streak, recording back-to-back weeks of net positive flows for the first time since early October last year. According to Soso Value data, the products pulled in roughly $568 million this week, following approximately $787 million the week prior. That's a meaningful reversal after 5 consecutive weeks of withdrawals that totaled nearly $3.8 billion, the largest outflow streak since spot Bitcoin ETFs launched. Ethereum ETFs also joined the recovery, logging their second straight positive week with around $23 million in net inflows. The dual positive weeks for both products is the first such run since October. There's an important caveat here. Daily flows within the week were choppy, with strong inflows early offset by redemptions on Thursday and Friday. That pattern suggests cautious re-entry rather than a decisive shift back to risk-on positioning. Still, the fact that institutional flows have turned positive twice in a row, even modestly, matters. It breaks the narrative of unrelenting outflows that dominated headlines through February. Blockstream's marketing director flagged that Bitcoin ETFs have already surpassed the cumulative inflows of gold ETFs over their first 15 years, a milestone that lands differently when sentiment sits this low. On-chain data is flashing one of the more sobering reads of this cycle. CryptoQuant contributor Darkfrost reports that 43% of Bitcoin's circulating supply, measured through unspent transaction outputs, is currently sitting at a loss. Only 57% remains in profit. To put that in context, during genuine bull market conditions, roughly 75% of supply typically trades in profit. The current figure represents a significant deviation from that baseline and closely resembles readings seen during previous deep corrections. Darkfrost notes there are some signs of stabilization within the current consolidation phase, but warns that if additional supply falls into loss territory, it could replicate levels associated with prior bear markets rather than mid-cycle corrections. The macro backdrop is adding complexity. Escalating tensions in the Strait of Hormuz have pushed crude oil prices significantly higher, which historically raises inflation expectations and increases stress on speculative assets. Bitcoin, like other risk assets, tends to suffer in that environment. Darkfrost frames the current moment as a potential end-of-cycle phase where geopolitical pressure and on-chain deterioration are reinforcing each other. The critical threshold to watch is whether the proportion of supply and profit drops further or begins recovering toward the 75% level that has historically preceded sustainable rallies. XRP is deep in the red for a large share of its holder base. According to on-chain analysis, approximately 60% of XRP's circulating supply is currently held at a cost basis above the current trading price. That translates to an estimated $50 billion in unrealized losses sitting across the XRP investor base. Two forces are driving the pressure. Spot ETF outflows from XRP-linked products have reduced demand-side support, while broader market sentiment has deteriorated sharply. When both factors align, less institutional inflow and declining retail confidence, price has no natural floor to lean on. XRP had been one of the stronger performers earlier in the bull cycle, benefiting from the Ripple legal victory and renewed institutional interest. The reversal from those highs has been steep, and the current holder pain data reflects just how much of that rally has been retraced. The read-through for the broader altcoin market is also notable. If one of the top 5 assets by market cap is seeing this level of unrealized loss concentration, it signals that the altcoin correction has been deeper than price action alone suggests. The question now is whether improving ETF sentiment, as seen in Bitcoin flows this week, eventually rotates back into XRP, or whether the asset faces continued distribution pressure. South Korean exchange Bithumb is facing a proposed 6-month partial operating ban following alleged anti-money laundering violations. The action has been recommended by South Korean financial regulators after the exchange was found to have breached AML compliance requirements. A partial ban at the operational level could restrict Bithumb's ability to onboard new customers or process certain transaction types for a defined period, depending on the scope of the enforcement action. This matters beyond just Bithumb. South Korea is one of the most active retail crypto markets globally, with consistently high trading volumes and a passionate investor base. Regulatory enforcement actions targeting major domestic exchanges create uncertainty across that market, impacting both retail participation and the broader confidence in crypto infrastructure within the country. This also arrives at a moment when global regulators are sharpening their focus on crypto exchange compliance. South Korea's approach to AML enforcement has been increasingly aggressive since regulatory frameworks were tightened following a series of exchange-related controversies. For Bithumb, which has faced regulatory scrutiny before, a 6-month partial suspension would represent a meaningful operational setback during what is already a challenging market environment. Here's something worth paying attention to. While equity futures in the United States were dropping sharply, S&P 500 futures down nearly 2%, NASDAQ off by roughly 4%, and crude oil was surging by around 28% due to escalating tensions involving the US, Israel, and Iran, Ethereum barely moved. The asset held near $2,000, finding support in the 1950 to 1970 range that has acted as a floor through recent volatility. Bitcoin similarly showed restraint, declining only modestly in an environment that typically triggers aggressive selling across speculative assets. The divergence is being noted by analysts. 2 interpretations are circulating. The first is that crypto positioning is already so light after months of outflows that there's not much left to sell. The second is that Bitcoin and Ethereum are increasingly being treated as a neutral risk channel during geopolitical events, neither a traditional safe haven like gold, nor a pure risk asset that moves in lockstep with equities. Ethereum's technical structure remains intact, with analysts identifying the 1950 to 1970 range as the level that needs to hold for any recovery toward the 2070 to 2100 resistance zone. If sellers break below that floor decisively, the picture changes. For now, the resilience is notable. That's your Swap Hunt Daily News for March 9th. If this roundup kept you ahead of the market, subscribe to Swap Hunt HQ here on YouTube and follow Swap Hunt on X for real-time alerts throughout the day. See you tomorrow.